Hey folks, Dan Frio here with your closing bell for February 11th, 2025. So it was contentious moments in Congress today when they interviewed Federal Chairman Powell. We're going to have a little bit of a recap, but I hope you enjoyed the live video I did today. What I did is I posted a live event, and I happened to just time it perfectly. It was right when they started talking about housing and then the tariffs. So it was a good interview. So check out one of my live streams above. You can watch it just for 5-10 minutes just to learn something. That's kind of cool, the coolness behind the scenes. So what happened today? Well, mortgage rates, they ticked up just a little bit today. The markets are just waiting for some data, but here, let's go over to recap some of the things that was highlighted today with Federal Chairman Powell. Powell predicts a time when mortgages will be impossible to get in parts of the U.S. And the big thing there is insurance. Who's going to insure these things? Because on the West Coast, we have fires. In the Florida regions and that area, we have hurricanes and floods, and same thing all the way from Florida to Texas. So the insurance costs are going extremely high. So one of the first things I usually talk to buyers when they're looking to buy that first home, you guys know it if you own a house now, insurance costs can get really expensive. So before you really go out and buy a house, check with your local insurance agent just to get an idea what insurances would be in your area. So, but here's what he predicts, and that's the reason why he predicts that. And it was contentious times. They were asking him back and forth some of the things he was saying. But one of the things that's expected to come in tomorrow is the CPI. That's an inflation number that we all really focus in on. And the PCE is what the Federal Reserve really puts the most weight in. But the CPI, the consumer inflation, is what gets the most headlines. It's supposed to ease a little bit in tomorrow's data. So here's what we have on the agenda for tomorrow's calendar. We have the CPI coming in, and there's a whole arrangement of them. I'm just going to give you 4 warnings. If these things come in hotter than expected, like if you get the year-over-year CPI hitting 3, the markets are going to get hammered, and you're going to see mortgage rates spike. However, if you see an unordinary reduction in these numbers, you might see a good rally in stocks as well as the bond market. The bond market is just sitting there for some guidance, waiting to pick a direction, and we want it to pick the direction on going down. So let's get over to the bond market today. It got hammered. It's down 26 ticks, and that's why mortgage rates went up, like you saw on my first screen right through there. But what I usually do on my channel is I try to pick you a snippet of the day that I think would give you the most bang for the buck. And today we're picking Rick Santelli from CNBC. So take it away, Rick. Give us your read on what to expect tomorrow and just comments about the Fed in general. Take it away, buddy. Bam.
Our friend Rick Santelli. Rick, a kind of a fascinating statement from Jay Powell and the Fed, because the Fed did cut rates and acted like they certainly were in a hurry last year. I don't know what's changed.
Oh, they absolutely did in a huge way, no doubt about it. I'll give you a couple of counterpoints. How many in this room or in any room in September, they cut 50 basis points in mid-September, thought Trump would be president, or thought that DeepSeek would be pushing NVIDIA off to stage right? How many? Or the next chart. How about the next chart? This is a chart of year-over-year CPI core, which is going to be out tomorrow at 8:30 Eastern, which our last look was 3.2%. On the left side, it's under 2% pre-COVID. On the right side, it's above 3%. There's your answer. There's your answer in a chart. That's the reason the Fed isn't cutting, because they've been miscalculating the sturdiness of inflation, among other things, or maybe underestimating the sturdiness of the labor market. I give them credit for making the right decision and being more flexible, but they definitely had a head of steam to cut last fall. Now, we're going to look at 3 charts very quickly here. A 2-day of 2-year, 10-year, and 30-year. And what I want you to see is the right side is higher than the left side. All maturities are trading higher than yesterday's highs. The longer the maturity, the more above yesterday's high yields they traded. Okay? And why is that? Well, because we're going into CPI, among other things, and the yield curve is steepening, what we call bear steepening. Don't want to get too much in the weeds. With prices going down, yields going up, and the yield curve steepening, that's a bear steepening. And if you look at where the yield curve, 2s10s was, the last time we saw CPI, the 14th of January, here's that chart, okay? It's basically we've seen it flattening. That is not a good thing, and I fully suspect that tomorrow we're going to see the same dynamics with inflation, but I think the market's getting much more discriminating on who they listen to. Back to you, Kelly.
Rick, thank you. We appreciate it. Watching that 2s10 spread, he's been telling us.
Bam. So that was Rick's take on all of this. So that's what we're taking from there. So let's get over to see, is there any changes on the CME FedWatch tool? So again, if you're new to the channel, we go over to the CME FedWatch tool. It's actually a website you can go to, and it's going to tell you or give you a prediction of what the Federal Reserve is going to do at the next meetings. Basically, I think it's now through all the way through 2026. So here's what the likelihood is here. Let me go over to here and get the probabilities so you can see that on your screen. So here's the probabilities. Right now, we're at a 4.25 to 4.5 on the federal funds rate, and that's the rate that the Federal Reserve controls, and this is what we follow to see if the Federal Reserve is going to cut rates or not. And this gives us a kind of an idea what's going on. So let me blow this up a little bit, scroll this up. So there's really not supposed to be a rate cut until maybe July now. It was going to be March, and then it went to May, and then it went to June. Now it's all the way pushed out to July. So we're going to continue to monitor this, but if tomorrow's CPI number, guys, is good, you're going to see a great rally in the markets. If it's right on point, you won't see anything, but any miss one way or another is going to be amplified. You can guarantee that. So that's what we're seeing right through there. And then let's see how equities ended the day. Green, green, red, red, and green. So we got green on the Dow Jones and the S&P and the VIX. The VIX spiked up 1%. That's given us a little bit of a concern on Wall Street. Let's get to cryptocurrency. It's getting hammered as well. It's down to 96. Then go to oil. Oil is up, and we don't like oil. And we also focus on oil on this channel. The reason being is this is in everything, basically everything. And it is, as the price of this commodity goes up, the prices of everything goes up, as well as inflation. So that's why we watch it so in detail. So my name is Dan Frio. What do I do for a living? Well, I'm actually hopefully your nationwide mortgage loan officer with a slogan of this: one application, one credit pool, and we're going to shop your loan over 30 different lenders. So how do we do that? Well, I got a video coming out actually tomorrow to explain to you exactly that, and I actually pulled a curtain behind everything so let you guys see in the back room on how we do all this and why you probably, after you watch that, you're going to choose us to be your mortgage lender no matter where you live in the country, because I'm licensed in all 50 states as well as Puerto Rico, and I'm set up with, I work at People's Bank and Trust, but we're also set up with over 30 different lenders. Right now the count is at 30, and we're hoping to build that from there to offer you guys more products, better rates, fees, everything in the process smoothless. So that's what we're looking and trying to build out. So support us. We would love to help you navigate this environment. If you're looking to buy maybe your first house, maybe looking to refinance, maybe you're looking at buying an investment property. How can we help you? Well, you can apply now. Just click the apply now button. You're going to be launched out to our online system. What happens is once you do that, I'll get in touch with you within probably hours. But what we ask you to do is probably one of these two things. One is schedule a consultation. I'm on there right now. I'm on there every day. So you can schedule a consultation with me directly, or you can scroll down to the bottom of our website. And today, if you're watching this video today, which is February 11th, our phone system is in the process of being ported over to a new company. So this line is out, but if you need me, please just email me at dan@therateupdate.com. Love to help you in any way I can. This phone system will be back up and running probably within 24 hours. So that's what we're promised, and we're waiting to see, and I'm working on that behind the scenes. So thanks so much for watching, folks. Hope you learned something today on some of these videos. If you haven't subscribed yet, please do that right down below. Otherwise, I hope to see you back here tomorrow morning at the opening bell. Take care. Have a great evening, folks. See you then. Bye-bye.